Okay, so let's understand the implications of the fractional reserve banking system on the quantity of money in metrocity. Let's assume the total quantity of money in metrocity before the innovation of banking was $1,000 million. With the advent of warehouse banking, the total quantity of money in the economy still remains intact. The deposits made in the warehouse banks are cash. Payments are made by transferring ownership of deposits. There is a one-to-one correspondence between cash and deposits in the warehouse banking economy. Since deposits is the new way of making payments, we need to include deposits in the definition of money in metrocity. So money is now cash or currency and deposits. However, for each dollar deposited, $1 cash is retired from the system to the bank's vault. The money locked in the bank's vault is not available for public use. However, the deposits are, and therefore the quantity of money in the economy is the quantity of money held by public, not including money in the vaults. The quantity of money in the economy in metrocity is therefore the quantity of money held by the public in cash, not including money in the vaults. So if the total deposits in metrocity is, say, $500 million, due to the one-on-one correspondence, there is also $500 million in the vaults. The total quantity of money, therefore, in the economy is the total currency, which is $1,000 million, minus dollars in the bank vaults, which is now $500 million, no longer available for public consumption, plus $500 million in bank deposits, which is available as a mode of payment, which therefore equals $1,000 million. So we see here that the innovation of warehouse banking does not change the quantity of money in the economy. Now let's see how fractional reserve banking changes the money or not in the economy. So with the lending innovation created by the wizards of Megabank, the quantity of money in metrocity is altered and the one-to-one correspondence is no longer valid. Now let's see how that's true with an example. So when Yuri is granted a $5 million loan by Megabank, Megabank creates a deposit without an addition to cash in the bank vaults. The total quantity of money in metrocity now becomes, so the total quantity of money is equal to the total currency, which is still $1,000 million, minus the currency in the bank's vaults, which is $500 million, plus bank deposits, which is now $505 million, thanks to the loan granted by Megabank, which makes the total quantity of money in metrocity at $1,005 million. So we see now that the innovation of lending changes the money supply in metrocity. Now this is an important concept in understanding how banking assets can change the quantity of money in an economy. Next, we will extend this example to understand the concepts of banking reserves and how changes in reserves affect the quantity of money and in turn interest rates. We will also understand the relationship between interest rates and exchange rates, sources of demand and supply for loans and foreign exchange, and the effects of change in the quantity of money on interest and exchange rates.